Hey guys, welcome back to the Crypto Explorer channel. Today we are going to dive into PancakeSwap's farms. So I did a video about PancakeSwap, bringing you all the aspects that they have, the different features, etc. It was more of an introduction video to it. So if you're new to the channel and even to PancakeSwap and you never really took the time to see what it has to offer, I will link that video down in the comment section. I will pin it. So go and check it out. It will get you acquainted with the platform, and after it, yeah, you come on this one and you'll take a look into farms, because on that one I only briefly touch on the different farms that they have, how can you use them, and I don't go in full on depth as I will on this one. Okay, so in this one what we will be talking, so you can see there's different farm types here. There's 4, V3, V2, boosters, stable swap. We'll take a look into every single one of those, but more specifically, we'll dive deeper into V3 farms. At the same time, I have one open position here with this specific pair on a V3 farm, just to give you an idea of the type of rewards you can generate. And this is just basically for demo purposes and show you with how much of a smaller bag you can even get started and see some passive income with it. Okay, but yeah, overall we're going to take a look into also automated options. So if you're new to the concentrated liquidity game, PancakeSwap also has you covered with some farms that are automated by different protocols outside of PancakeSwap. We'll also take a look into those, and those will be better for newcomers to DeFi, or even to people who are not willing to take the time out of their day to manage their concentrated positions. So we're going to take a look at it all, okay, in full on depth when it comes to PancakeSwap farms. At the same time, guys, all of the info I'm about to share with you on this video is applicable cross-chain. Doesn't really matter if you're working with Binance Smart Chain, Ethereum, Base. It doesn't really matter also which DEX you're talking about. They will have different interfaces, yes, but this knowledge is applicable cross-chain, cross-DEX. It doesn't really matter, okay? Concentrated liquidity is the same, be it on PancakeSwap or Uniswap or whatever DEX you're talking about, all right? Now, that being said, we're gonna get started. But now it's your time to act and click that like button and subscribe. At the same time, if you have any incoming questions that might pop out during this video, something I might not explain as deeply or I might fail to explain to you, leave a comment, ask me, and I'll do my best to get back to you and reply. Okay, guys? Now, that being said, let's get started talking about the different types of farms here on PancakeSwap. And before moving into these 4 farm types, why not going in already into the automated positions? Because you don't really need all that much knowledge to take a look at those. So yeah, let's jump in onto those and see how they work, all right? For that, you'll have to come here on the Earn tab. You see we are currently on the Farm section, but you have to go on the Position Manager. So you go onto PancakeSwap, you click the Earn tab, and then you click on Position Manager, and it will open up all the farms that have automated liquidity positions with different protocols. From here, you have the toggle from live and finished. Live are the farms that are currently active. You can sort them out also by different aspects. Hot are the ones that have more volume, that have more deposits, then APR, earn, total staked, latest, the ones that have been deployed the latest. You can even search by managers, etc. Or you can just browse yourself freely throughout the menu and see what they have to offer. So one thing you should look out for is that these are the simplest ones. The ones that say single token, they are pretty simple to join in, because you only have to have one token in your wallet and you can come right up in and deposit, as you will see in a second. But from here, there's the APR, which is the percentage, the return percentage that you will get. When you click here on the info button, you will see there's also a manager fee. And so far, I've only seen this manager fee applied into the ones that have the single token option. So if I would try to add liquidity here, I would only have to provide SATS token, and that would be the only one that you would need to have in your wallet. Although when you do that, doesn't mean that when you take your money out, which you can do at any point in time, it doesn't mean that you will get the SATS token back, because it depends on the price range. You'll understand this better as the video goes, but basically take a look what they say here on the info tab. Single token deposits only. The final position may consist with both tokens. Learn more about the strategy here. So depending on how the price evolves through time, depending on market action, the volatility of the markets will determine if the price goes up or down. If it goes up, you might end up having the more allocation here on the wrapped BNB token of the pair, because after all, this is a pair that you are providing liquidity to. Although you only deposit sats, you will be having exposure to both tokens. But if the price goes down, it's highly likely that you will get more sats than wrapped BNB when you are willing to take your position out. Okay, so that's one thing for you to look out for. Let's take another look here at the different options. When you're dropping here or browsing here through the menu, always take a look at the info, because they will tell you the manager fee. And this is also something very important, because that's the con from just joining these automated positions, is that you will not keep 100% of the profits for yourself. So this is the fee that you're paying the manager for taking the work out of your hands, basically, and managing all of the position. So you get also the info here, which is the manager of the pool. In this case, it's Alpaca Finance. It's a renowned protocol, but there's others. There's Brill Finance. Make sure that you're comfortable with that, because it's not PancakeSwap which is managing the pools. It's always the manager that they state here, okay? And of course, they will always take 15% of the profits that your deposit will generate. You're paying their work, basically. Then you have also an APR here. Also have in mind, since these are automated positions, highly likely you will experience impermanent loss quite a lot. And that added up with the manager fee, you will definitely not see as big as of returns as you would if you would be managing the position yourself. But then again, if you're getting started and you want to take a test out of concentrated liquidity and you don't want to manage it yourself, well, do this, join one of these. Again, guys, not financial advice, but join one of these, learn, see, check it out daily, see how the price is going up or down. And at the end of the day, you got to learn the game, because the thing about DeFi is that you have to take ownership of your own finances. You have to take accountability for your decisions, and you have to learn, you have to understand how to play the game. And chances are, if you take the time and put the effort, through time you'll see how easy this is, and you'll be able to do it yourself. It's not rocket science, guys, believe me. So there's different protocols here on the menu, but I just broke it down, everything that you should know about this position. Now, if you're not sure about which pair of tokens you should deposit with, well, let me give you this advice. Go with something that you wouldn't mind holding long term. So don't go crazy. For example, in here they have some pairs that I don't know about. For example, AIOZ. Probably this is a sort of AI token, but I'm not sure about this one. So I would stay away from those. But for example, Bitcoin ETH, two blue chip assets, wrapped BNB USDT. This one also blue chip in the stable pair. So they bring a lot of volume. I know that for a fact that this one brings a lot of volume. It can be good because it generates a lot of fees, but it can also be risky because of impermanent loss. Okay, but yeah, that's why I told you, choose tokens that you wouldn't mind holding for the long run, because that will highly likely not make you to sell your bag when you see impermanent loss kicking in. Because if you look at impermanent loss in this way, it's the same thing that, for example, buying Bitcoin, if the price drops tomorrow and if you sell tomorrow, yes, you're selling at a loss, you lost money. But if you hold it, you hold your position and the price goes back up again, you never really lost money because you didn't sell you did not sell at a loss, which is the case also with impermanent loss. You only realize it when you sell, and that's also one of the things which you have to consider with these automated positions, because you don't have all that much control. They are currently always automating your position, so if it goes out of range, they sell your position and they buy again in order to get you in range. So impermanent loss will, whatever you like it or not, will be realized if that is the case. So in under volatile market conditions, which means price fluctuating very strongly throughout the day, you will highly likely experience some impermanent loss. I've seen that with some positions that I held with the automated liquidity managers, but at the end of the day, I didn't sell at a loss. I didn't panic. I didn't sell my bag because I saw the value going down. I knew it. They were blue chip assets. I stood with it, and when I got out at a profit. So that's also the risks that you need to know about the concentrated liquidity automated positions game. Okay, so there's plenty to choose from here, but this is definitely the easier approach to it. So yeah, just know about the risks that we just discussed. All right, now let's go back to farms and let's see which are the differences between v3, v2, stable, etc. Okay, so for that, we'll click again the Earn tab, and then we'll come here on the first one which says Farms. Now this will by default show you all the farm types. There will be V3, V2, booster available, and stable swap. So the differences are V3 are concentrated liquidity. You will have to set ranges for your liquidity, okay? V2 is the older model of liquidity providing, so you don't have to set ranges, but at the same time you will not earn as much fees from it. So if you deposit, for example, $100 here or 1,000 on USDT BNB pair on the V2 and compare with the same amount of deposit on the V3, if the V3 is within range, you will earn substantially more compared with the V2, okay? But at the same time, on the V2, you'll never go out of range. It will generate revenue consistently. All right, booster available relates to the farms that are available to be boosted here. This is something that I go much deeper on the video that I mentioned that I linked in on the pinned comment section, but mostly it means that you have to lock some cake tokens in order to boost this APR up. So you get VCake, and from those VCake gouges you get the benefit for this APR boost. Okay, so those are the boosted type farms. And last but not least, stable swap. This relates to the type of farms. Actually, I could just be toggling this one on and off and show you because they will filter themselves out. But here on stable swap shows pairs which are stable, so you will not suffer impermanent loss here unless something happens on one of the tokens of the pairs that makes it depeg from price. Okay, so for example, LIS USD USDT pair, these pair are two stable coins pair. They are pegged to the dollar, and it had to something out of the ordinary to happen in order for them to lose peg. But if that happens, yes, you'll see your deposit value going down and you will experience impermanent loss if you sell while the depeg just is ongoing. Okay, the same is true for mcake and cake, SDcake and cake, and pendle. They are different tokens, although they will have the same market price. They're different, and one of them can depeg. For example, here mpendle could depeg from pendle, which is the original one, and the others, the same is true for the others. SDcake can depeg from cake, and mcake can depeg also from the father or mother token, as you might want to call it, which is cake, the original token. Okay, so these are the stable swap. The stable ones, they won't bring you as much revenue because they're pegged in price, and therefore the APRs here are much lower, so they don't need to just counter that potential price fluctuation that other tokens do have, and that's why you see higher APRs with other pairs than compared with stable ones. Okay, but if we want to see more info about this, you can go here on the three dots, and then there's the info tab. If you click it, it will give you all the info about tokens, specific tokens, and also pairs across the different farm types. So they go automatically on the V3. If you want to check what's happening on V2 or on StableSwap, you can check it out yourself. But on the V3, they give you the analytics here. TVL 400, this is overall across all farms. The TVL 479 mil, the volume for the past 24 hours 424 mil, and then there's the top tokens. You can also see top pairs and also transactions that are ongoing here. So everything is recorded under info and analytics. If you want to just check it out for yourself what's happening on the V2, it will give you the same statistics, okay? Just for the sake of not making too long of a video, I won't delve into those all that much now that I explained you the differences. But for example, now here we are, it just loaded the V2, so the volume is higher, the liquidity is higher, but since it's less capital efficient, this volume does not generate as much fees as the concentrated liquidity versions, okay? So just so you're seeing here more volume, just so that is a fact. Yes, understand that it's spread across all the price ranges. So at the end, this volume is being split, is generating fees that are being split over $1.6 billion. Okay, so at the end of the day, this is less capital efficient, will generate less fees than compared with the V3. So let's go back onto the V3, and as you can see, this volume, which is pretty much on pair, almost one-to-one with the TVL, all the fees generated here will be split across this current TVL, okay? So as you can see, there's a lot less, well, not a lot less, but there's less volume being generated, but there's a lot less TVL for those fees to be split evenly through. So you see that that's why here it's being generating more fees and more money overall. Now, I told you before when we were talking about the automated manager pairs, if you're not sure about which pair you should hold, this is where you should also take a look at, because if you're not bullish about the specific token pairs, you can also go for volume, because where there is more volume, there will be more fees. So the top traded pairs here are definitely USDT and Wrap BNB. There's two different pairs. This relates to the price tier, the fee tier. So whenever people trade across these pairs, this one will generate 0.01% in, basically it's a sort of tax that PancakeSwap takes when traders trade, and only a fraction of that will be sent to fees to pay users, okay? So from here you can see these are the most traded pairs. They have more volume, they will have more fees. In my case, I deposited the demo position that I mentioned before here on the USDT Wrap BNB with this fee tier, because although it has less volume, since the fee tier is wider, it means that I won't have to manage it as actively. So I only advise this one to go into this one, people who understand already concentrated liquidity, because highly likely with this one you'll go out of range very often. So it's not advisable to just have one position open. So you'll see better what I mean as we go into it. So let me just click on the token. And by the way, when you click on the token, it will give you specific analytics on the pair, right? You can also get this information when we are back on the farms. And if you click any farm, let me show you. So you can have access to that same dashboard if you go here on any pair, you click it, and then you'll have the C pair info. It will link you to that same dashboard, okay? And while that one is loading still, let me just take the moment to just on a side note tell you, if you want to operate within different blockchains with PancakeSwap, you can. You just have to click here where it says BNB Smart Chain, and from the drop down menu you will see all the available chains that PancakeSwap operates with. There's the ETH, Polygon, ZK Sync, etc. In this case, just for example, I'll just go through with the BNB Smart Chain, okay? So in here, that was more on a side note. So in here on this USDT wrap BNB pair, you can see there's the fee tier we're looking at, the TVL, current volume traded for the past 24 hours, and fees also generated for the past 24 hours. The higher the volume, the better, because it will be split evenly between the people who are providing liquidity. So this amount of TVL, or okay. Uh, if you keep scrolling down under, you will see all the action that this pair has been generating. So whenever a swap of this specific pair happens, fees are generated, and those fees are just what you can see here. They total for this specific amount for the past 24 hours, and they will go to pay the people who provide liquidity to this pair. Okay, so this is the volume chart. If you click here on specific days, you will have it showing up here how much volume it was generated on that specific day. If you go to liquidity, you see how liquidity is being distributed by people who are depositing. Usually there will be higher liquidity around the current price range, which is the red line. They have it here on the subtitles. So you can also see there's positions which they do have capital deployed, but those are out of range right now, so they are not earning any fees. But that can be also part of your strategy. I mean, markets will not have the same price all throughout the year. So if you are anticipating some moment in price that it's going to, let's say, if you are anticipating BNB to go up in price, you should deposit also on the right side here of the chart where the BNB price is going up. As you can see, as further right as we go, you'll see that the wrap BNB price just keeps on getting higher. So that's the main difference. While if we go here on the left, you see that the wrap BNB price keeps on getting lower. And that is the main difference. So if you anticipate the markets, you can set your ranges accordingly and just keep on earning without losing your position, because that's also something that you can do. Although the example I'm about to show you of my position, I only have one specific range open, you can have multiple. And it's just a matter of you designing your own strategy and taking a look also at the price tiers and just designing the strategy accordingly. Okay, so there will also be the fee section here. On the fee tab, it shows you which days generated the more fees and also how the TVL has been moving throughout this. We are taking a look at USDT wrap BNB pair at the 0.05% fee range. Take a look at this number. So there's going to be 54 mil in TVL and 58 mil in volume for the past 24 hours. So let's take a look at the same pair but with a different fee tier range. With a smaller one, let's take a look at 0.01% and see the difference between this one and that one. For that, we can just go back here onto the farms and click on the CPair info. Could also have just clicked here on the overview and selected from the list. So now that it has loaded up, so let me show you. The difference is that the TVL here is much lower. So 7.6 million TVL, a lot higher volume, and the fees are actually almost half the size. But the difference here is that these 10K fees will be split evenly through these 7.65 mil TVL. So 10K split between 7.6 mil, while on the other hand we have 19K split in between 54 mil TVL, almost 55 mil. So the difference in TVL is substantial. So it goes to show you that the other range will earn you much higher fees. But again, it's riskier because the range is so narrow that highly likely you'll get out of range very, very often. And I will show you from here my position so that we can take a look at it in further depth with a practical example. So let me go back here on farms. And this is the position that I have opened here. So remember we were talking about this farm APR boost. So let's take a look at that here. Now, this combined APR is 19% for this specific pair. The farm APR, 7.5%. This is what is generating cake here. So I've had this position open for 2 weeks and 3 days roughly, and it has generated this cake. I never harvested it because it's just for the sake of demo. So actually, let me go in and manage the position because it gives you all the details that you need to know. So from here, I could go on stake or manage position. I want to go and manage position. It tells me my current APR, the minimum, maximum. So let's go and manage position. From here, you can see the different aspects of your position, like the liquidity amount, the unclaimed fees. So one thing about those unclaimed fees, I never harvested, like I told you, but from history, you will see that I started this position on the 17th of March. This is the time even, and I deposited overall, it was worth altogether around 50 US dollars. So 33 in USDT and 0.03 in BNB. That was my deposit back then. After it, 11 days after, on the 28th of March, I deposited $30 more overall, 21 in USDT and remaining in BNB. Okay, so that's why I'm telling you this, because all these unclaimed fees, they were not generated from the current position of liquidity that I have, which is over $86. Actually, since BNB price got up through time, this liquidity position now is worth slightly more, because overall I deposited $80, 81 or 82 the most, and right now I have a position which is worth more due to that price appreciation of BNB. At the same time, the opposite could happen, and that's when you experience also impermanent loss. Although technically you can also experience impermanent loss when price goes up, but that's not the case here. I'm telling you this so that you can be aware that if the price of BNB would be going down, I could have also be seeing here a liquidity value which is below my total investment. So again, there's risks to it, guys. All right. So overall, these unclaimed fees have been generated so far. Remember, 11 days I have been farming with roughly 50 USDT deposited, and only 7 days from here. I'm recording this video on April 4th. So 6-7 days have only been farming with the $80 in my liquidity. Okay, so this is so that you can have just an idea of how much rewards you could earn from this even with a smaller bag. But have in mind one thing: if you would have the same amount of liquidity on the V2, it wouldn't have generated nearly, even if I would have started on the 17th of March on the V2 with the $85 as a deposit, I wouldn't have generated as much fees. I'm pretty sure about that, because I've been playing with concentrated liquidity and also with the V2 for a while, and I know for sure that V2 would not have bring as much money in this short amount of time. So for passive income, I think V3 is much more capital efficient, as they say, but at the same time, you have to manage your position. Right now, the position is active, right? So the current price, as you can see here, 587. This is USDT per BNB, right? The minimum I set here and the maximum I set here. So if it goes out of range, I stop earning, be it here on unclaimed fees and also on the farm. So if you do remember, I had earned in cake roughly 70 cents. So I'm earning so far over $4 in over a little over 2 weeks of providing liquidity here on this specific pair. So you have an idea of the type of rewards that I'm getting. Currently, this is the APR that I am getting with farming. Now, from here on, what could I do? I could add and I could remove. If I click remove, you don't have to remove everything. So this is also in handy if you want to set a different strategy. Let's say I would want to take, let's say, 25% of the position. I could come here and select whatever percentage I want to take, or take it all, right? I would take out of it, let's say 25%, and then I would start a different range. Why would this be interesting? So let me go back. It would be interesting in the case that I want I would anticipate the current price to go out of my range, but I didn't want to stop earning fees. So then I would have to start a new position. How would I do that? Because if I would add here, it would just add to my current liquidity position. So if I want to add to a different price range, I would just go back. So I click the backwards arrow here, and in here it will allow you to add liquidity on this last button down here. It also at the same time it's showing my hidden positions. So these are positions that I closed. It was the first ones when I was testing out ranges. I wasn't happy with the reward, so I closed those and I opened this one, and this one has been working quite well, I must say. For the past 2 weeks, I would say that I've been actively farming for over 70% at the time. So sometimes it goes out of range, yes, but if it doesn't keep me out of range for more than, let's say, 2 days, I won't even bother to change it. And if you're going with a smaller bag, that's something that you have to take into consideration, because depositing and locking your tokens into farms, it will cost you a couple bucks the most. So if you're unlocking and locking every single day when you go out of range, and if you're working with a smaller bag, it might not be that profitable, because you'll get your profits eaten up, or they won't even cover for the fees that you will have to pay for locking and unlocking from your current positions. Okay, so have that in mind as well. So but yeah, from here you could just select v3 stable swap, v2 also, or you can go on add liquidity, and in here you will have to choose the pair that you are willing to provide liquidity again. You can do this manually here, of course, but if you would go back to the farm section, you can add liquidity directly to a specific pair of your liking. All right. So in here, let's work with BNB and the USDT case that I'm. The first thing is obviously choosing the token pair, and then there's the V3 LP fee tier. As you can see, now it's on the more concentrated tier, which will bring you the more rewards, but at the same time, it will be the riskier one, because it can go out of range if the market conditions are too volatile, just like that. So it's going to be a risky one. If I would be depositing on this one, I would be making sure that my range would be wider. Okay, so I would go, let's say, you can switch that up here. So as you can see, only 9% of the people pick this one here, and 91%, the vast majority, is on this one, because this one is much more easy to manage. So that's why it has the hot icon. And yeah, I can confirm from my demo position, because like I said, I would have been farming so far for over 70% of the time. It was just a matter of tuning my price range to my APR risk, and of course I could have made my APR lower and not stop generating fees when it goes out of range, because my range would be wider. But it's the name of the game. If you go with a wider range, you will earn less. If you go with the more concentrated, you will earn more. That's also why it can play an important role when you lock different positions. So here on the 0.05% fee tier, you can then go and select manually a price here with the plus and minus ticks for the minimum price. For the maximum price, you can even click here and insert manually a specific price that you want to go with. So remember the position that I had opened, it had the max price of 605 USDT per BNB. So let's say I want to add a specific range that locks with that. So if price of BNB goes up and I go out of range, I can have another set range, just tuning in and start generating fees. So I would set here the price for minimum to be 605, and maximum, let's say, I would go with 650. And you will see that they will give you the info here that your position will not earn fees or be used in trades until the market price moves into your range, because this is not the current range, right? So it's going to become idle, and although you deposit, you won't generate fees. And also it gives you the info on the left side that the market price is outside of your specified range, single assets deposit only. And since you are basically, what's happening here is that it only allows you to deposit BNB because you are buying into on the right, on the upwards price range. So when price is appreciating, you'll have to buy always with the more valuable asset. This is true for whatever pair you're looking at. In this case, it's BNB USDT pair, so the more valuable asset is BNB. So since it's completely out of range for the upward price range, you will pay exclusively with BNB. If I would set the price range here to the left, so I had 555 as the minimum. Let's say I go with 555 as max. So I'm basically locking the other way, and 500 here as the minimum. This is just an example. You will see that the price range will also adjust to only be available to buy with USDT. And as you can see, since this is a price range which is set full on the left of the current price, it only allows me to deposit with lower value asset from the pair, which is USDT. Okay, again, this is true for whatever pair you're looking at, whatever DEX, whatever chain. Okay, so this applies across the board. Basically, these are the basics for concentrated liquidity game. All right. So if I wanted to deposit here, I would select the amount of USDT and then go with that value. And if you click here on the 5% range, for example, this will give you a 5% variation of the current price for the left and for the right. And in this case, it will ask you to deposit assets 50-50, $5 in BNB, so that accounts for the right side of the chart, and $5 in USDT, that accounts for the left side of the chart. At the same time, you can see the APR here. If I would be to depositing with these conditions, would have this generated APR. If I would go wider, the APR will go lower. If I would go 10%, the APR goes down. You see, instantly it went half of what it was showing roughly. And if I go full on 20%, which is the wider range, it goes even further down than that, as you can see. But at the same time, it will give you much more leverage. So you don't have to work with or you don't have to be subject to market volatility all that much because your range is wider. Although yes, it can still go out of price, of course. If it goes all the way up or down, yes, that can happen definitely. And you can also set it manually from here. You can play around, and let's say if you are predicting price going up for BNB, you can do this. And as you can see, it moves accordingly. Here now it's only asking 1.6 dollars in USDT and 5.23 in BNB for the deposit. So you see how these things differ depending on where is your specific range set at, and which is the percentage that you are predicting for it to go up or down. So you have an idea of how it works. Knowing this, you can design different strategies. So for example, this is having a really high APR, so you could go with a smaller amount, a smaller percentage of your bag here, and go with a bigger one for a bigger, wider range, so to offset the risk. So now the range is wider, it's earning you a lower APR, but at the same time, you can offset that with a bigger deposit, for example, and go with a smaller one if you go in a shorter amount of range, because that will be more concentrated. It will just generate more fees, so you don't need as much allocated there to generate some fees. But at the same time, you can do the opposite. You can go all in with a bigger position with the 5% range. Remember, the example I just gave you with my own position was with this 5% range, so it's generating well over 100% in APR. You can even shorten this one out here, and although you're using this 0.05% fee here, you can even short this one out, and you see the APR just went to 184%. So it's up to you. You can play with the chart, you can play with the minimum and max price. It goes the same way, so it's up to you. Basically, this is how you can work with passive income earning options here with concentrated liquidity. Guys, this is all I had for you for today with the video. If there are any questions, drop them on the comments below. Hit like and subscribe if you haven't so far. Thank you for watching. I know this is quite a long video, but it's on a full depth approach to concentrated liquidity. Hopefully it was clear enough and you understood it all by now, and sooner you'll be a master liquidity, concentrated liquidity manager yourself. Okay, guys, thank you for watching. Take care. You know how crazy this crypto world can get, and I'll see you on the next one.